Okay, so guys, let us go ahead and take on practice question number 12 from your study material on investment decision. So this example is on whether to replace an existing machine, whether you should replace a machine immediately or after 1 year or after 2 years or after 3 years or after 4 years, right? Now let's go ahead and take on this example. Yes.
A and company is contemplating whether to replace an existing machine or to spend money on overhauling it. Now, A and company currently pays no taxes. The replacement machine cost is rupees 90,000 now.
So in case you want to buy that new machine today, okay, it is going to cost you rupees 90,000 initial outlay,
and requires maintenance of 10,000 rupees at the end of every year for 8 years.
That means that this new machine will last for how many years? 8 years. And you have to spend rupees 10,000 on maintenance of this new machine for each of the next 8 years. So that is supposed to be the maintenance cost of that is a cost to be incurred on the new machine, right? Yes. Rupees 10,000 per annum for the next 8 years. Next.
At the end of 8 years, it would have a salvage value of 20,000 rupees and would be sold.
That means after 8 years, this new machine can be sold for rupees 20,000. That is a salvage value of this machine after 8 years. Next.
The existing machine requires increasing amount of maintenance each year and its salvage value falls each year as follows.
You know, it's understandable. The existing machine will cost you more amount to maintain as the years go by. And as the old machine or the existing machine is going to age, getting older, the salvage value of that existing machine will fall, right? It has to fall. Next.
Now the details are given here. Present maintenance is 0, salvage value is 40,000.
Present means at time 0 there is no maintenance cost, 0, and it can be sold for how much?
40,000
rupees of 40,000 immediately. That means without incurring any maintenance cost on the existing machine, the existing machine can be sold in the market for rupees 40,000. But in case you're going to use this existing machine for 1 year and then sell it, for that 1 year you have to incur maintenance cost.
of 10,000
rupees 10,000,
and you can sell it for 25,000.
and you can sell the existing machine for 25,000 rupees. Don't get confused. The initial data, the 90,000, 10,000 and 20,000 for the new machine, right? This is for the existing machine. You have to spend rupees 10,000 on maintenance, and the old or the existing machine can be sold for how much? 25,000 end of year 1. Or year 2, what happens?
Year 2 maintenance will be 20,000.
What is the meaning? In case you decide to replace a existing machine end of year 2, what happens? You'll be incurring 10,000 in year 1 maintenance. Also what? You'll be incurring 20,000 in year 2, and then you can sell the machine for how much?
15,000.
Only 15,000 rupees cash inflow, right? The salvage value. Next.
Next, year 3. Maintenance 30,000, salvage value 10,000.
That means what? In case you decide to replace the existing machine after 3 years, you'll be incurring 10,000 for the first year, 20,000 for the second year, another 30,000 for the third year on maintenance, and then you will be able to sell the existing machine for how much?
10,000.
Only 10,000 rupees end of year 3. Then what about year 4?
40,000 maintenance and 0 salvage value.
That means what? You'll be incurring 10,000 maintenance costs in year 1, 20,000 in year 2, 30,000 in year 3, 40,000 in year 4, and you get to sell the old machine for
nothing.
That's a 0, zilch, no value at all. Is that fine? So 0 salvage value.
So the opportunity cost of capital for A and company is 15%. Required when should the company replace the machine?
Now just see the solution out
The
there.
present value annuity factor for 8 years at 15%, 4.4873.
They got
And
the annuity
eighth year,
factor, and also for the 8th year, how much?
0.3269.
Okay, so please understand this. Now, first of all, what I do, I'll calculate the present value of all my cash outflows relating to the new machine. Is that fine?
Yes, sir.
Now, what I do, rupees 90,000 is the initial outlay. Right? That's a cash outflow. And I'll be incurring rupees 10,000 on maintenance of the new machine for how many years? 8 years.
8 years.
Now, each year rupees 10,000. If I want to find the present value of this, I can do rupees 10,000 into the annuity factor
4.4873.
How much you get? 40?
4,870.
That is a present value of the maintenance cost that will be incurred on the new machine. And then the new machine can be sold at the end of 8th year for rupees 20,000, right? Now, what is the present value of that cash inflow? 20,000 into
0.3269.
How much you get?
6,538.
So that you subtract. So net, what is your the cost or the cash outflow?
1,28,335.
That is a cash outflow. The present value of cash outflow, how many years? For 8 years. Now, what I can do at this point, I can calculate something called, okay, this is a present value of all my cash outflows on the new machine, right? That is, it's 8-year cash flow, right?
Yes, sir.
So, I can find on a per annum basis what is my cost. For that, we find something called the
Equivalent annual cost.
annual cost. It's called the equated or equivalent annualized or annual cost. What I should do, it is 1,28,000.
335.
Divide that by the present value of annuity factor for 8 years, which is
4.4873.
Now, how much I get?
28,600.
That means what? You spending rupees 1,28,000, how much?
335.
For 8 years is as good as spending rupees 28,000
600.
on a per annum basis. Is that fine?
Yes.
That is your equated annual cost. I will tell you later why you compute this number, okay? So first you compute this number and have it aside. Is that clear?
Yes.
Now we shall proceed with the solution. Now, what is your cash flow in case you decide to replace the existing machine, right? Immediately you're going to throw the existing machine and buy the new machine. What are your cash flows? Now, what I can do is, now tell me, what is the maintenance cost? It's going to be 0. Is that fine?
Yes, sir.
In case you decide to replace the existing machine immediately, the maintenance cost on the existing machine is going to be 0. And what is the cash inflow from selling the old machine? 40,000 inflow. And what is the equated annual cost for the new machine? 28,600 in present value terms, times 0. No discounting, nothing over here. Now, what is the net inflow? Around 11,400 is a net inflow in case you decide to replace existing machine immediately. Is that clear?
Yes, sir.
That is the first working. Now, what if you replace at the end of first year? Then what happens is, you're going to do this way. What you're going to do is, rupees 10,000 is a maintenance cost, outflow. And then rupees 25,000 is a salvage value of the existing machine, right? 25,000?
Yes, sir.
Okay. And also, when you throw this old machine out and buy the new machine, now what is the per annum cost will be incurring to run the new machine? 28,600 is the equated annual cost. Now, what I have to consider all the 3 cash flows, but since I want the present value, because I want to bring all these numbers to present value. So, what I will do, 10,000 rupees into the first year factor at 15%,
870.
With nothing but 1 divided by 1.15, right?
Yes, sir.
That is not given in the question, but you can find out. 1 by 1.15. So 0.870, 10,000 into that, and then 25,000 into the same factor, but that's an inflow. Again 28,600 into 0.870, that's an outflow.
Outflow.
So add up all these numbers, how much you get net?
It is minus 11,830.
It is a negative number, that is 11,000 how much?
832.
Okay, that is a present value of cash outflow in case what? You decide to replace a existing machine end of year 1. Let's go to year 2, okay. In case you decide to replace a existing machine in year 2, please remember, you have to spend rupees 10,000 on maintenance of the existing machine in year 1, right? 10,000 into 0.87, no doubt. But end of second year, you will be spending another 20,000. And also you will be enjoying a 15,000 cash inflow from the sale. And you will be incurring 28,000. Remember, that is the cost of running the new machine on a per annum basis, 28,600. Is that fine?
Yes, sir.
Because you will be buying the new machine at the end of year 2 and use it for the next 8 years, right? Year 3, 4, 5, 6, 7, 8, 9, 10. Got it? So what happens is, please remember, the 28,600 is what? Is a per annum cost of running the new machine. Now what I will do is, I will discount all these numbers. Just see, 10,000 into 0.87.
87.
And here for the second year, 20,000 into
756.
and also 25,000 into
15,000.
15,000 into 0.756 inflow, and 28,000
600
into that's outflow. Now what is the total outflow after minusing the inflow, that 15,000 into 0.756?
It's 34,102 negative.
Negative, right? Then suppose I decide to replace a existing machine end of year 3, I got to incur rupees 10,000 in the first year for maintenance, 20,000 for the second year, and 30,000 for the third year, and I'll be able to enjoy how much? 10,000 inflow, and I have to spend 28,600. That's an equated annual cost. That's a cost of running the new machine on a per annum basis. Is that fine? Just see, end of year 3, suppose you're going to replace 10,000 into 0.87, 20,000 into 0.75, 6, and then
28,600 into 0.658,
And,
30,000 into 0.658,
and inflow how much? 10,000 into
0.658.
that's a cash inflow, right? Net, what is outflow?
It's negative 55,799.
Then you go to year 4. Then what happens? I'll take 10,000 rupees into 0.870, 20,000 into 0.756, 30,000 into
0.658,
and also 40,000 into
0.572.
and there is no salvage value. But what is the cost of running the new machine? 28,600 into
570.
That's it. Adding up all,
Minus 82,799.
and you saw the cost is increasing year on year.
Yeah.
Now what is the conclusion to be given at the end?
So the company should replace the old machine immediately because the PV of cost of replacing the old machine with new machine is least.
Yes or no? Because I think you get a positive figure, right?
Yeah, 11,000.
Therefore, you better replace it immediately.
Yeah, 11,000.
That is the only positive figure.
Yeah.
Suppose even that is negative, take the least
Negative.
right? That is all here. It is a very different sum, guys. So learn this for the examination really well. Good luck.
Thank you, sir.